Welcome to Trading Lounge and the Asian report for the 15th of November, starting with the ASX here. We're looking at this as a bullish and a bearish corrective pattern here. So the bullish pattern is very simple, because if we get support on 6,800, a nice tested support, we're at resistance at the moment. But if this market can sit up there and then take out one of these highs here, then we'll be looking at the bullish count, which is up for one, back for two, up for one, back for two, and so on, moving much higher at that point. But we really want to get past this little area through here for that. So we're also looking at this in terms of an A wave, a B wave, and a C wave for a larger B wave here, and then a move down from that point. And the reason for that is that this move down here counts as 5 waves here. So if we get an impulse wave here, after a correction here, we should see another impulse wave to the downside. So we're just keeping an eye on that as well. We can look at things like gold. Gold's sort of ready to push up a little bit higher here now, because gold's got, this is a 4-hour chart for gold, so we've got an A and a B and a C wave down here, and we're looking for this to move up through here as well. There is one more little glitch here as well. We've got wave E here, but it also could be counted over here where this C wave is here. So we could also, with 5 waves in here, but we could count it from here as well. So 1 and 2 here, and then 3 here and 4 here, which is the 38.2% retracement level. So it's possible to have one more little move down through here. But as we see gold push up, either from this point here, which we'll know in a day or two, either pushing up from here, or having one more leg down here and then pushing up. But once we start this trend here, then we'll see indices on the weaker side at that point. So we're keeping an eye on that, and of course other markets as well. So yeah, just getting back to here in a nutshell, the 6,800 is the line in the sand of support and resistance to be a longer term trend to the upside or to the downside. So for the downside at the moment, we're looking at it as an A and a B and a C wave here. And let's go in and have a look at that. There's a few weak spots in the count that I have here. From the wave B low here, we'll look at 1 and 2 and 3, an A and a B and a C for wave 4, and then 5 waves up as 1 and 2 and 3 and 4 and 5. The weak spot here, of course, is wave 4 overlapping wave 1 here, so it does present more of a bullish case where we have wave 1 here and wave 2 here, then wave 1 and back for wave 2 here, and then moving higher from that point. But we'll just run with this at the moment, and what we're actually looking for here is 5 waves up through here. So let's just go into the hourly chart here, and there's a couple of things that I need to talk about here. Is that obviously this market is, price point is from IG Markets, and it's a CFD product, and it will have the cash market during the day and the futures at night, and they've got their own little mix on that, so we just need to be careful about a few things. So the move up here takes the high out here, where it didn't do that on the cash market, and also down here as well, I've got this labeled as wave 1 here, and A and B and C for wave 2. It also just breaches this low here as well, but on the cash market it hasn't done that. So just reiterating that here on the cash market here on the 5-minute chart here, we can see the move down here is an impulse wave and a corrective wave back up, so it doesn't make a new high here. And then we have a very clear 1, 2, 3, 4, and 5 down here. So to there, 1 and 2 and 3 and 4 and 5. So we've got an A and a B and a C wave here, and then we go up for 1, 2. So we don't make a new low here on the second move down through here. It's possible to count this up here as an A and a B and a C wave up here. So we need to be a little bit mindful of that. We're not at the 7,650 here for the cash market just yet, but taking this on board is how I've labeled all of this here. Now, as I mentioned, we can count this up as an A and a B and a C wave to this point here, so it can fail from here, so we really need to be careful. So we need to get support on the 6750, which is a really important number. You can see it coming through here as a bit of a balance line, and it's just the halfway mark. We'll call it the midpoint, halfway between two whole numbers, 700 and 800 here, and it's part of the trading levels subgroup. So subgroup 1 of 10, 20 and 30, and we get support on 30, we know we get to 50, so we're at 50 here. If we get support on 50, then we'll push up into group 2, 65, 72 and 80, which will be the next resistance, and so on at that point. So yeah, this here, let's just go in and have a look at this on the tick chart here. So it's possible to have it as an A and a B and a C wave up to this top here, right? And it can fail from that point. So we just need to be mindful of that. If it's going to be a wave 4 in terms of 1 and 2 and 3 and 4 here, then we can take from this low here to this high here. The 38.2% retracement level is here. That possibly can count down into 3 waves here. So we may be able to put, just copy that and put that wave 4 there. If this is going to get sort of any uglier, then we're going to look at this as an A wave here, a B wave pushing up here, and then a C wave moving down. But we know Fridays tend to be bullish. And if Friday is bullish, well then Monday's going to follow through and be bullish, and that will also go through till Tuesday as well. But you'll see profit taking on Tuesday morning and the trend resuming in the afternoon, and then your swing days on Wednesday and Thursday. So 6751, we're kind of not sitting on there yet, but we've it's looking quite good at this particular point. So we could go long above this high here now. Okay, it's a bit close, but that's okay. So and the 38.2% retracement level is here. So that's the other point too. So the market can drop to 67.34.8. So 35 is the closest, strongest number. We can see the support there, but we always allow a little bit, and depending with a CFD provider, the platform will be set up on the bid price or the ask price, not the last price. So you'll need to be mindful of that as well if you're trading CFDs. Yeah, so all I can say about this, it's still possible for this to come down and retest that support there. So if you do get in here, make it a smaller position and then look to add on, say, 67, 60, and then build in on that point. And also too, once you got support on 67.72, the backbone of subgroup 2 here, then also add to that as well. You will experience correction at the 6.8 here, and you could also take part profit on that, or just hold through that, because should be going higher from that point. Probably best to have a look at the S&P video as well to understand its impulse wave to the upside. Okay, so I'll just put that on this 1 hour chart here as a little signal to the upside here. So just put that on there. So that's at 54 on there, and it could certainly pull back into this space here before going up into here. Okay. Okay, off to Hong Kong here. So just on the daily chart, we have this. I don't particularly understand the whole count here. It's all a bit. I haven't really had time to sit with it. I need to, when things get complicated, I need to sit with it. But I've just got too much else to do, and it's not one of our major trading things. But what I can point out is that it does appear that we've got our impulse wave down here now, and that means we'll pull back to a 50-60% retracement level here. So we'll just check that out in a minute. So just moving in on that here. So, okay, that's where we left off yesterday. So, yeah, so 1 and 2 and 3 and 4, better check that on the hourly, but basically we'll pull back up into this space from this low here, I imagine, but I'll double check that as well. We could trade up long here because the rest of the world will be going up at this stage, so we could look to trade up to 27 here. Okay, I've already done some work here. So, yeah, so from the top here, 1 and 2, a nice third wave here. That 2 needs to just tuck in there a bit. And that's 1, 2, 3, 4, 5. That needs to go there. 1, 2, 3, 4, 5. ABC, 1, 2, 1, 2, 3, 4, 5, 4, 5. A little bit dodgy. No, that's okay. So we should push up from there. So what I'm suggesting is that I don't normally do this. This is 26.50 here. It's halfway between 25,000 and 28,000. Anyway, always halfway between here as well. But it's an important level in the bigger picture. It just always is. So 25 and the 28 here. So it's just the way cookie crumbles. I won't get into all that at the moment. But if that becomes support again, you can go long and go long up to the 27 here, and then we'll check it out to see what pattern that we've actually got here. I think we're in some sort of larger correction with all of this, but also too, I've got a little thin line here, so this looks a bit impulsive up here, but I haven't checked it. But you could go up and go long from that point. It will be a struggle at that level there, right? So once you move up into that level there, then move that stop up under this one here to get that risk reward, and that's tighten things up a little bit. And then if you get the classic trading levels pattern sitting on 2650, then go long up to that point there. So high risk at this particular point. I mean, you could just even get in a little bit earlier and get out at that level, and then just wait for it to sit there. Off to India now. So from the top here, I won't go over all of this, but from the top here, we're looking at this being bearish, but it hasn't got the personality of being bearish. So we're going to pretty much get out of this trade, and then we're going to look to go long, because if I can just draw here, when a market comes up and then has a correction, the A wave is normally the sharpest, and then the B wave will do its thing, and then the C wave in a correction will be on more of an angle. I'm exaggerating, but okay, somewhere like that. And that tells me that the angle here compared to this one here is telling me that the market is reluctantly heading lower, and that means to me that there's buyers there, support and so on. So it means that we'll be going higher at that point. If this was bearish, then we would see the market come down reasonably sharp, come back up, and then we'll be beginning into the third wave. So it would also come down quite sharp as well, if not sharper. But we're not getting that with this C wave here. So we're getting more of this one here. That's why I've labeled it wave C. I know that we're being short from here. So we could exit right here. In fact, you know what we'll do? I think we will. So we're just going to exit here now, and we'll take a small loss on that. Because logically we should put it above the level here, but it's going to be a little bit late. We want to be sort of heading in long at that point. So we're just going to take a little bit more of a risk here, and we'll take a smaller position on this side here as well. So we're pretty confident that the US markets will be heading up on Friday, so it will also be a bit of, not that India has to follow by any means, but it will be a bit of a catalyst. So just switch that from short to long, and look for support on 900 area here to move in again at that point. So a classic trading levels pattern at 900. The resistance will be at the supply level through here, which is the 50 and the 60% retracement level. But because this is corrective here, that means that we should be making new highs above this one here and moving higher. I don't have a lot of evidence for that so far, but based on this here, it certainly looks like that. So yeah. Alrighty, I'll leave that at that. Thanks for tuning in.